Hello and welcome to another daily market update by Market Intel. So today we want to take a look at the VeChain chart. It hasn't been covered in a long time and cryptos are moving all the time, 24/7. So let's take a look at the chart. Let's go. We are now on the Market Intel website, dailymarketupdate.com. You can register for free. The link is in the description and you get access to all of these updates, completely for free. Today, we want to take a look at the VeChain chart. As I said, we haven't covered it for a while, so let's take a look at the chart. By the way, we're also covering Phantom, Polygon, Bitcoin, Ethereum, and other charts. For example, Hedera Hashgraph, Avalanche, Chainlink. But now let's take a look at the weekly chart. This is the long-term chart, and you can see the overall perspective hasn't really changed from the last, let's say since the last video. It is still possible to count or interpret a wave 2 as complete in the July support area or in the July low from last year. This was sort of this area here where potentially a wave 2 bottomed on the long-term chart. You can see the chart is looking quite impulsive, at least the wave 1 to the upside did. 28 cents is a key breakout point on this chart, and the correction is a complex WXY pattern. So from this long-term support or trading area, we expect a rally in a third wave. Now, has it started? Maybe. We have to take a look at the daily chart, which we're going to take a look. Well, we are going to do that in a minute. Important, I think, is to always understand what is the key invalidation point. Now, here on the VeChain chart, for the idea that a third wave has started, the invalidation point is this swing low from last year. We're going to take a look at that on the smaller time frame. But overall, we've said, look, this is an entire larger box, where the price, if the third wave starts, okay, the price might never ever re-enter that area, and it is located between 0 and 4.2 cents. Of course, nothing is guaranteed, but because this box presents an opportunity, there is a green border around it, and to really confirm that a third wave is unfolding, we need a break above 28 cents, and the overall target is 58 cents plus, 64 cents, 75. That's all nice to have. First of all, we need to get above 28 cents, and then 58 cents is a long-term mathematical projection, not a guarantee, based on Elliott wave and the application of Fibonacci mathematics. So let's take a look at the daily chart then. Here you can see there's a local invalidation point that I talked about. It is at 1.3 cents. This level needs to hold to maintain the overall bullish perspective on this chart. There is a so-called 1-2 setup. You can see it on the chart here. That means it's generally an opportunity. We have a 5-wave move up on this chart, which formed the top at 5.5 cents in February, March this year. This was the first significant rally from the bear market low. And now we are in this long correction. It's a really, really substantial correction, which started there in March. And there is no clear signal at this stage that this correction is over. But the trading area is still the same that we talked about in previous updates. So you can see that this is a complex WXYXZ correction. And if this is the case, then the wave 2 could already be complete. If that's the case, we should see a break above 3.3 cents next, followed by a break above 5.5 cents. However, we actually see it as a little bit more likely that this wave 2 is still unfolding in a more complex Z wave with support at 1.8 cents. And as I said, the 1.3 cent level is the local invalidation point. Okay, could the wave 2 be over? Yes, but the reaction to that, let's say to that August low, isn't impulsive at all. So it's only an alternative perspective, and we only assign it a 35% probability. With a 65% probability, we expect another low. I think it is highly likely, and the price might test this 1.8 cent level, the 88.7 Fibonacci retracement. But really, the price shouldn't break below it. Well, it could, but if it does that, then the overall idea of a 1-2 setup will reduce in likelihood. We don't want a wave 2 break below the 88.7 Fibonacci retracement, okay? The problem is that from the last low, the reaction hasn't really been impulsive at all, so there is no confirmation at this stage that the low is in, but a break above the July high here at 3.3 cents would be a first decent signal that actually a low has formed, and we're moving higher in a third wave, which should then eventually lead to a break above that 5.5 cent level, which is the top of the wave 1, which formed in March this year, and which started actually this correction, which which means this would be a key breakout to the upside. So I think we need a little bit more patience. The coordinates of our trading areas are clear, invalidation points are clear, probabilities should be clear, and so on. But everything is dynamic, you know, this is not set in stone. This is an analysis based on what the price is doing right now. And as I said, there is no confirmed low in place yet. So we need a bit more patience. The entire crypto sector is a little bit in a situation at the moment. So yeah, that might, you know, we might get back into the new uptrend soon. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, feel free to register on our website and also let me know in the comments which other cryptocurrencies or tech stocks or US stocks you want me to cover in future videos. Thank you very much. Bye-bye.